Hey everybody, welcome back to the channel. I'm Steve, the Frugal Father. I hope that you've been having a great week. I hope that you have made money, saved money, paid off some debt, did a side hustle, or invested some of your money. So last video we talked about the financial pyramid, just to give you a big overview about all the different levels of money and risk and things like that. In this video, we are going to talk about the first level, the safe haven places of putting your money. Is anything 100%? Absolutely not. But is it safer than putting it in some startup company? Absolutely, on the risk level scale. Okay, so again, I'm going into the book, Dunnan's Guide to Your Investments. It's chapter 3. I think this is great, again, for folks that either it's your first time investing or hearing about these different things, or maybe it's your 100th time and you're learning something new, or you're going back into your bank's documents or any other documents you have in these investments and looking over to make sure you fully understand everything. Because trust me, we don't want to get caught up in a small detail and we lose out in the end. All right. So finding safe places for your money. The first one is banks. The first one we always need to check is, are they FDIC insured? That's Federal Deposit Insurance Corporation. Are they insured? The limit is $250,000, but read the fine print to see what does that all cover. Does it cover your checking and your savings account? Does it cover CDs? Like, make sure you know what it covers, right? For credit unions have their own insurance as well. Same concept, but it's titled something different. Also look on the FDIC's website to find out about bank failures or banks that are on the FDIC's watch list. That means that they do not have enough capital, or they're over leveraged, and we want to move away from those banks. Even if you have been with them for, let's say, 20, 30 years, sometimes it's time to cut the cord and move on. All right. So in the bank, to get the most out of your bank, you want to find ones that offer free checking, free savings accounts, any other perks. Maybe they're offering a free, I know that these might be out of style, but safety deposit boxes. You want to also find out about overdraft fees. Do they offer, like, what is their limit that they'll sort of back you up in overdraft fees, or how much do they charge for overdraft fees? So make sure you know that. Making sure you know who's on your accounts, who has access to that. Do you need to be tied? Remember, everybody's relationship is different. So, if you have a partner, you're not married, let's say, or you are married and you both have you're both on each other's checking accounts, but you're sort of separate, right? If one overdraws money, they're going to pull it out of your account. I was actually at a bank one time when this happened, and the girlfriend was very unhappy with her boyfriend, and it was not a pleasant scene. So really make sure that you know how things are working at your bank, who you're with, how it's all related and tied together, okay? The next thing is ATMs, making sure that if you are withdrawing cash, that it's at your bank's ATM and that it's free. Or if you bank online, where are the ATMs that you can use for free, or do you get reimbursed for those? Would it be at a gas station maybe, or maybe they have a partnership with certain other banks that you can use their ATM for free and you will not get hit with any charges. So just make sure of that. And if you're going on vacation, just again, make sure that you're taking enough cash with you, because some places do only use cash and not cards or your phones. So the next thing is going to be, there's a next thing called money market accounts. So it pays you a higher interest rate than a checking account, but that rate can fluctuate. And you do have to meet minimum requirements. So, it might be $5,000. And then if you go below it, you may be hit with fines or fees or penalties. So just make sure that you're checking out the money market, all the terms and conditions of a money market account. But it is a great way if you put I've seen a lot of folks online that say, only keep about $2,000 in your checking account. The rest really should go to your savings, emergency fund accounts, and then to a money market account to make sure that you're earning interest. Again, there's no standard. You don't have to follow a standard. Whatever your comfort level is. If your comfort level is $500, then it's $500. If it's $10,000, then it's $10,000. But just make sure that your money is making money. Because remember, how long have you had to sit in meetings or prepare reports or presentations or deal with customers to earn that money? And it was sometimes stressful and painful. But you want to make sure that your money is earning money for all the work and effort that you're putting in to earning income. The next thing is certificates of deposits or CDs. Rates are great right now. They haven't been this high in a long time. So if you have some extra money, some of them are only $500 to open, some are $1,000 to open. If you don't need that money for, let's say, 6 months or a year or up to, I think, 5 years maybe, a lot of banks go to, go ahead and ladder some CDs. So if you have some extra money sitting around, kind of maybe doing a 6 month, a year, maybe a 2 year one, and earn those interest because, again, rates can change. So you want to make sure that you're locking in a good rate. Don't put all your eggs in one basket, but kind of spread it out so you sort of have that CD ladder going on to help you in the future. And maybe remember, you don't have to just go down to your local bank. There's online banks. Ally is one, or I think it's Ally, saying it right. There's brokerage one. So if you have like a Fidelity account, a Vanguard, a Schwab, you can go in there and you can get a CD or money market account from another bank, maybe in another state. But again, always make sure that you are doing your research before you hit those buttons. Make sure you're looking at that bank. Is it on the FDIC watch list? Is it solvent? All those good things before you hit that buy button. So those are just some other ways. Credit unions typically do offer higher rates than traditional banks. So you may want to check out your local credit union. I always say have more than one bank. So whether it's a credit union or an online bank as well, have more than one, okay? The next thing we'll talk about is buying bonds. So I was fortunate to be a recipient of bonds when my grandparents were alive. I didn't understand them when I was little. But I do now because I read and educated myself on them. It's a great way, again, to still kind of keep a safety security net for yourself in the future. It can help with, a down payment on a car or a house, or if you want to put, finish a basement or fund a kid's college or a grandchild's college or whomever. You can go to treasurydirect.gov and go ahead and start buying bonds or T-bills or other things on their website out there for yourself or for loved ones as well. So I know I-bonds, you purchase them, that is the face value of the bond, and the lowest you can go is $25. So if you're doing a side hustle and you're earning at least more than $25 or more a month, it might not be a bad idea to throw some money into a savings bond. So check those out. Last but not least, we talked about a credit union. I do highly recommend a credit union. A lot of times you've heard things like, oh, I can never get in because I don't meet the eligibility. But again, eligibility changes. So they may have added, maybe it was only open to police, firefighters, and EMTs, but now it's open to county workers or Maybe it's residents just of that town. So call up the credit union, see how you can qualify to get into the credit union, and definitely take advantage of all their goods and services. So those are the basics of kind of starting your investment life. As far as the risk level goes, it's some of the safest risks, the lowest risk level that you can take with investing your money, versus burying it in a coffee can in your backyard or under your mattress. Or back in the day, it was actually, some people put it in the bottom here of these curtains. They would open it up and put some money inside of the hem of the curtain. So, those Depression era folks, they thought of all different ways to make sure that they, save their money, but kind of protected it in odd places. So if you still have any family members that do that, or just check all kinds of odd places. You never know what may turn up. With that, I hope you found this video useful and helpful. Please like, share, and subscribe. Comment. I love to hear other safe ways that you guys are investing or saving your money in. Give a shout out to any credit unions or banks or brokerage firms that you use that you find super helpful and valuable. Because as a community, we love to share information. That's how knowledge grows. With that, I hope you guys have a great rest of the week, and I'll see you in the next video.